It's Tuesday, February 19th. Welcome to Market Foolery. I'm Matt Greer, and joining me in studio, we have Motley Fool analyst Ron Gross and Jason Moser. Gentlemen, welcome. How we doing?
Hey, Mac. How are you?
Guys, I'm good. We're going to talk some war on cash. Jason, one of your favorite topics.
No.
We're going to talk some Facebook and AI. I mean, AI, robots. Who doesn't love robots?
The people that are saying it's going to end the world.
Okay, besides the people who are saying
everybody else likes
it.
Chris Hill seems to have a pretty rational fear of the rise of the machines.
That's true.
So.
Our future overlords.
Yeah.
Okay, but let's begin with Walmart and some really impressive earnings here, Ron. Same-store sales in the U.S. up 4.2%. Groceries and toys, two of the big highlights. E-commerce sales up 43%. I had to really hit the E there because you don't really think of Walmart with e-commerce, and the stock up around 3%. So some happy holidays for Walmart, huh?
Yeah, really strong. This is 18 quarters of U.S. comparable sales growth. And if you recall, 5 years ago or so, let's say, all we talked about is how they needed to turn the U.S. business, or this was going to be a company in trouble. And kudos to them for really getting that done 18 quarters later. What a streak. And as you said, the numbers are great. Comp sales of 4.2% is very strong. Strength in grocery sales, online orders, as you mentioned, e-commerce up 43%. Holiday purchases, including toys, were quite strong. They did have a little bit of a benefit from the government shutdown. It caused the government to move up the distribution of food stamps, and that actually had an impact, a small impact, but it did improve sales just a bit here that wouldn't happen again in the future. But, you know, traffic was up a little bit less than 1%. That's not amazing, but it's fine. What's better is that the average shopper's ticket was up 3.3%. So those two things combined to have some nice increase in sales.
That all sounds good. Jason, what's not to like here?
Well, I mean, nothing really. I mean, it depends on what you're looking for in an investment, right? I mean, if you go back 5 years and you look at how Walmart has performed, I mean, on an absolute basis, it's returned you some money, right? On a comparison with the market, it's trailing the market. That's understandable. You throw Amazon into the mix there, and then you can see very clearly, the premium that the market's been willing to assign Amazon because of the move towards e-commerce. But I think when it comes to Walmart, you have to look a little bit beyond the e-commerce part of the market and understand that Amazon still has that little cloud business that I think is a big
I've heard of that.
Is a big tailwind for them, and that is where it really differentiates itself from Walmart. I mean, I really do a doff of the cap to Walmart for competing because I really think they're doing a wonderful job of participating and competing in this space. But that's the one thing that Amazon has that Walmart doesn't, and I think that's why you would invest in Amazon over Walmart because you've got that cloud business that's operating on about a $30 billion run rate.
Amazon Web Services.
Well, yeah, some of you may have heard of it. And I mean, it's generating 30+% operating margins. So that's where a lot of that profitability comes from. Whereas with Walmart, you know, that is a retail play and that's operating on a much thinner margin. But again, not taking anything away from Walmart. I mean, what Walmart has been doing has been very admirable, particularly when you look at how quickly e-commerce has reshaped the retail space.
If you're looking for weakness, you could probably point to international here for Walmart. Sales were actually down 2%. If you exclude currency, it looks a little better, up almost 3%. But they've been struggling there. They've sold off their stores in Brazil recently. They merged their UK operations with a rival. They spent $16 billion on Flipkart. Let's see how that goes. I think we're going to see some pressure, at least in the near term, on earnings as a result of that acquisition. But perhaps it will end up, bearing fruit down the road. So international could use some firming, and if they get the U.S. and the international business firing on all cylinders, if you will, at the same time.
I will.
If that happens at the same time, then you'll see the stock, be a little bit less anemic.
Okay, so I want to tie those 2 points together because Jason was mentioning Amazon really kind of being assigned a multiple or premium in part because of Amazon Web Services in the cloud business. I think as you look at Walmart's success, there's no question that there's going to be room for Walmart and Amazon in the near future. The question we have as investors is, can these both be market-beating stocks? If Walmart has struggled to beat the market recently, is that going to change, or ultimately does Amazon keep Walmart from being a market beater.
So I'd actually jump in here and say perhaps the reason why Walmart has not beaten the market over the past 5 years is because they really had to adapt quickly to a space that had changed seemingly overnight. Now, they've made that adjustment, I think, pretty well. And I think one place where Walmart still does really well, especially when you compare it to Amazon, is in grocery. Now, Amazon's trying to participate more in that space, obviously, with the Whole Foods acquisition, but I think Walmart still has a leg up when it comes to the grocery space, and I think they'll probably continue to have that because I think their offering resonates with most of the people out there in the country looking for value and convenience. I mean, with Amazon, sure, you're getting value and convenience, but Whole Foods, they're starting to push those prices back up, so they are kind of separating themselves a little bit from maybe the bigger market opportunity. So I would actually venture a guess that Walmart can be a market-beating investment from today because they've adapted so well to the changing space. I think they've set themselves up for success.
I think that's fair. 21 times earnings, 2% dividend yield. I think it does have the potential to beat the market. Compare that to like a Costco who's at 28 times. You're paying a premium for a company like Costco. Walmart a little bit cheaper, and as a result, perhaps can be a market beater.
Okay, well, there you go. Bullish on Walmart, not quite as bullish on Costco. Is that fair?
At the current price,
it always comes back to Costco.
It's a great company. It's a great company, and it will be a great company for the foreseeable future. The stock's not that cheap, though.
And $1.50 hot dog and drink. Okay, so let's turn to the war on cash. Jason Moser, I know this is one of your favorite topics. Alphabet and Salesforce are investing $75 million in a UK online payment startup, Go Cardless. Now, Jason, this investment will help Go Cardless expand to the U.S. What's going on here?
Yeah, I mean, first and foremost, I mean, this is a drop in the bucket for Alphabet and Salesforce. I mean, this is just a rounding error for them. And so it makes a lot of sense for them to try to invest a little bit in the space to participate because clearly we've seen this move towards a cashless society, not only on the consumer side, but on the commercial side as well. And that's what Go Cardless does. Now, Go Cardless is working in a specific niche where they're working with businesses and their recurring payments. So if you're a business with a recurring payment, perhaps it's a subscription or some type of bill that you're paying, they're working with those businesses to get more a part of that market. And so from the consumer side, for an analogy, let's just liken it to, you have your mortgage payment direct debited from your account, from your checking account every month. I mean, I'd love to be able to put my mortgage payment on my credit card every month just because that would be free points. And that'd be pretty cool. Great. But, we can't do that. And so the next logical thing is to have your bank go ahead and just withdraw that money on behalf of the mortgage company. And so they're essentially, Go Cardless is working in that realm, so to speak. And it is a very lucrative market. I mean, when you look at business-to-business opportunity, MasterCard was recently quoted on their call, calling that opportunity the dollars that flow through that business-to-business network on a global basis. I'm going to give you a guess, Mac. How big do you think that number is? Wild guess.
It's in the billions. It's in the multiple billions.
$125 trillion.
Wow.
Oh, my gosh.
Now, I'm talking about the money that flows through all of those networks. When you look domestically, you're looking at about a $25 trillion network. And so that's why they're trying to play into that market, because even just capturing a small slice of it is meaningful for a company like Go Cardless. And so working on those recurring payments as a direct debit versus making a card payment, there are puts and takes for either way you do it. But I think in a lot of cases with businesses that are looking to have a recurring predictable payment taken out from their account, I mean, that's just an easy way to do it.
Okay, guys, for our final story, we're going to talk some AI. We're going to talk some Facebook. Is Facebook coming after Siri and Alexa? Well, maybe, Jason. Facebook announced a partnership with Intel last month, and now, according to the Financial Times, Facebook is hoping its AI chips will power a virtual assistant that's smarter than Apple Siri and Amazon's Alexa. Jason, what do you think when you hear Facebook and AI and coming after Alexa and Siri?
Kind of want to run for the hills. I feel like maybe maybe we've had it. So I think that that is the sexy headline, talking about that AI that is going to be smarter than anything on the face of the earth. And I don't blame him for trying to put that across. I think this, in the near term at least, is a bet on Facebook's part in trying to find a way to moderate the content on their platforms in a better way. Right now, I mean, what we're finding is that moderation is not very scalable, and a lot of things keep slipping through the cracks. And so they're working with Intel, for example, to develop this AI chip that would ultimately help them do that, help them moderate the content on their platforms, which then creates a more engaging platform, which then brings more advertising customers in. And that's Facebook's bread and butter, right, is advertising revenue. So, I mean, from that perspective, it makes total sense. That's what they need to be focused on right now, because, I mean, it could be argued that they're in a bit of a bind. And if you look even out to India, I think India is a good example here with WhatsApp. I was just recently reading about how the government in India is really cracking down on the content that is making its way onto these platforms. And if they have their way there, I mean, that's one of WhatsApp's biggest markets. It would really stifle communication on that platform, which would really stifle any potential monetization opportunities Facebook has with WhatsApp. And I think we're all still questioning whether that was really a fair price that they paid back when they acquired WhatsApp, something like $20 billion. They haven't really produced any kind of meaningful monetization from it yet. So really, this is all about Facebook trying to figure out how to make its platform more engaging and to be able to filter that bad content out. Now, down the road, sure, they could come up with an assistant that is smarter than Siri or Alexa. Do I think they will? No, I don't. I mean, I think that they say a lot of things and they fail at a lot of things, too. I mean, there's this portal thing, which I don't know is really gaining any traction whatsoever. There was an assistant recently in Messenger. I think it was coined M. Yes. They shut that down. You know, I mean, you got to explain to me why this assistant matters. Tell me what I'm going to be doing with it. Right now, I think we're seeing a lot of the novelty wear off with a lot of these assistants as it stands.
Yeah, I don't have much to add there except for those who are dying for some insight into the Gross household over the weekend.
I am.
It should be known that just Sunday, I believe it was, I asked Alexa what she thought of Siri because I was bored. And she answered me. She said something to the effect of, "I am fond of all AIs."
That's nice.
Very diplomatic.
It was very diplomatic. So, you know, if you want to have some fun on the weekends, pop over to my home.
My only experience, we don't have Alexa or any of these contraptions in the Greer household. My only experience with Alexa was at a Cub Scout meeting, and I was trying to get the kids to focus. This is a couple years ago, and there was an Alexa in the kitchen, and they were getting it to make fart noises or something like that.
That's never not funny.
And I can't compete with that. You've got like 9 and 10-year-old boys. I mean, like, you know what? And it's almost a reason to buy Alexa.
I remember when we introduced that into our household, and I told the kids try it. And so we got their mom with it when they went into the other room and used the remote control, and you ask Alexa for a fart. And then all of a sudden in the other room, you hear this. And you know, my wife kind of looks up and she's like, "What in the world was that?"
Yeah.
You know, the kids had a lot of fun with that.
So I wonder if Facebook can compete with that, you think?
That's tough.
I mean, hey, it sounds like there's a lot of hot air going on their platform. So, I mean, hey,
thank you.
One more thing,
though. It's a free show,
put
people.
this in a context with Amazon, because Amazon is working on the same type of thing, right? Amazon building their own chips, just like Facebook partnering with Intel, but it's a matter of what they're doing with those chips.
Yeah.
Amazon building that technology to basically let their cloud customers use. Okay, so if you're a cloud customer and you're using Amazon technology and it's more intuitive and it's helping your business, well, that's probably going to keep you in that network for a little bit longer, and that's a good thing ultimately for Amazon. But it falls really in line with that Jeff Bezos philosophy we've come to know and love, and that he wants to make money from you and those enterprises out there using Amazon devices and technology, not from buying the technology.
The blades, not the razor.
With Apple, yeah.
There you go. Well, the desert island question, guys, and once again, the caveat, do not invest this way at home. Please. It's just a fun throwaway question in the show. If you're on a desert island for the next 5 years and you can own only one of these stocks, what are you going with? Walmart, Google /Alphabet, or Facebook?
Jason?
So speaking as an Alphabet shareholder and not owning either of the other two. I'm going to stick with my guns and go with Alphabet. I just think there's too much opportunity there with what they're doing today.
I should mention Salesforce too. I'll throw in Salesforce.
You're going to give me Salesforce for free? I mean, I don't know. I just think search is forever, and the other properties they have with Waze and YouTube and Maps, just a lot of different ways to monetize some very valuable properties there.
Okay.
I'm going to have to agree, I think. I think Google's the way to go out of those four.
Okay. Very interesting. Ron and Jason, thanks for joining me.
Thank you.
As always, people on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Matt Greer. Thanks for listening, and we will see you tomorrow.